Hello everyone, I am Sajmi Siraj. In this video, we will have a quick exam-oriented discussion regarding AS 16, that is accounting for borrowing cost. First of all, let us check the objective of this standard. This standard discusses about the accounting treatment for borrowing cost, that is whether the borrowing cost should be capitalized along with the assets or whether it must be charged to the profit and loss statement. Let us check out the meaning of a borrowing cost. The borrowing costs are interest and other costs incurred in connection with borrowing of funds. It includes the following expenses: interest, commitment charges, amortization of discount or premium, amortization of ancillary costs, exchange differences to the extent these are regarded as an adjustment of interest cost, etc. Here we have to make a note that this standard does not deal with actual cost incurred or the imputed cost, opportunity cost or notional cost on owner's equity including preference share capital. It means that the standard does not deal with dividend accounting as dividend paid is not treated as a borrowing cost. Also, we have to make a further note that if the preference share capital is treated as borrowing, preference dividend is considered as a borrowing cost. Let us move on to the meaning of a qualifying asset. Qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. Thus, the assets which are ready for their intended use or sale during their acquisition are not qualifying assets. Here, substantial period of time means a period of 12 months. As per AS 16, the substantial period can be taken to be more than or less than 12 months depending upon the facts and the circumstances of the situation. Let us check when we must recognize a borrowing cost. Borrowing cost directly attributable to acquisition, construction, or production of a qualifying asset must be capitalized along with the asset, and if it is not a qualifying asset, it must be charged to the P&L account. Other borrowing costs are considered as expenses in the period in which these are incurred. Here, there is a further note that borrowing costs can be capitalized only when there are probable future economic benefits or inflow, and the borrowing costs can be measured reliably, and this can be considered as the asset recognition criteria. How we can recognize a borrowing cost? In case of a specific borrowing, actual borrowing cost of funds specifically borrowed for a particular qualifying asset is directly capitalized in the cost of asset, reducing income from temporary investment out of the specific borrowing funds. In case of a general borrowing, if the amount of general borrowings is used in the asset in parts, then in that condition we will calculate a weighted average amount of funds invested in the asset during the year, and then borrowing cost will be charged on this average amount of investment. And if there are more than one type of general borrowing, then we will calculate the average rate of borrowing cost on overall amount of general borrowings, and borrowing cost to be capitalized in the cost of the qualifying asset will be calculated at this average rate of borrowing cost. When to recognize a borrowing cost? Commencement of capitalization. Capitalization of borrowing costs should commence when all the following conditions are fulfilled. Expenses are being incurred on acquisition or construction or production of qualifying asset. Borrowing costs are being incurred. Activities which are essential for construction or acquisition are in progress for assets intended use or sale of qualifying asset. Moving on to the suspension of capitalization. Capitalization of borrowing costs should be suspended during the extended periods when the development of the qualifying asset is interrupted. And if the delay is a necessary part of the process of getting an asset necessary ready for its intended use or sale, capitalization of borrowing cost need not be suspended. Let us check the cessation of capitalization. Capitalization of borrowing cost should cease when substantially all activities for qualifying assets intended use or sale are complete, and even if in the case of the completion of an independent portion, capitalization on such portion should be ceased. Let us check the disclosure that are necessary under this standard. Mainly, following are required to be disclosed: the accounting policy for the borrowing cost and the amount of borrowing cost capitalized during the period. Hoping this video is useful for you. Thank you for watching and for your patient listening. Have a nice day.